if you can get China's GDP number within 2%, I think you've hit a bullseye.
Jim Paulson, what do you think? Jim?
Michelle?
Yeah. Hi,
Yes.
Jim. How are you? I didn't introduce you. Sorry. Wells Capital Management. It's early, Jim. It's for you, too.
Well, I don't disagree. The realities on the ground is probably a little less than what they report, but I think that the number comes in pretty close to expectations, and world growth we know is slowing. It's slowing here. It's slowing everywhere, particularly in the manufacturing sector. So it's not a surprise that China's still struggling on that front. But I think there's already been a lot of stimulus dumped not only in China but across the world, and more likely than not, we're going to see data improve here as we go forward here into the first quarter.
You're talking about the United States? You're talking about China?
I'm talking about all of it, Michelle. I think, I really think we're still going to find out that the drop in commodity prices is a stimulant for the 90% plus of the globe that consumes commodities. And if you combine that with already very lowered long-term sovereign bond yields everywhere, including China, and then you give everyone outside the United States a big currency devaluation, I think that stuff's going to work, and we're going to bounce the global growth rate.
Michael, are we going to look back and say that this was nothing more than a growth scare, or are we headed towards a global recession? Because it matters to the direction of where the market goes, depending on what your belief is.
Well, it really does. And I think, yeah, we're going to do one of those two things, no question about it. It strikes me that this doesn't feel like the global recession coming on. I mean, I think that Jim's right. I think that these low energy prices are probably going to give us the safety margin that we all need in terms of growth and getting the consumer going. The thing that people aren't talking about, people are talking about China, and people are talking about oil, and clearly a world without the Fed. The thing that caught me last week was Walmart closing stores. So that gives me a bit of a pause and a concern about what's going on with the U.S. consumer in an economy that's two-thirds driven by that consumer. So these oil prices and I think lower energy prices are critical. This is a slowdown worth really a good deal of attention, but I don't think panic.
Dennis, even if we're not headed into a recession, there seems to be very few reasons for buyers to step back in unless they're potentially covering short positions.
I couldn't agree more. I don't think anybody would want to step into the midst of this. I think any strength that you get in the stock market is probably going to be very short-lived. One of the things that I take a look at more than anything is the decline that's taking place in the adjusted monetary base. The base has fallen off the edge of a cliff. Take a look at this. It comes out on Thursday.
Money supply, right?
It's money supply. That's the real money supply. That's the, as I like to say, that's the stock from which the other soups of monetary aggregates are derived, and it has plummeted. Now, that's just the Fed perhaps rolling off securities, but nonetheless, it is falling. And as long as there's less money, it means that if the economy is going to be demanding more money, it has to come from someplace. It's going to come out of equities.